All right, we will resume this Senate Economics Legislation Committee inquiry into the provisions of the Currency Restrictions on the Use of Cash Bill 2019. I welcome officials from the Reserve Bank of Australia. Thank you very much for appearing before the committee today. I remind officials that the Senate has resolved that an officer of a department of the Commonwealth or of a state or territory shall not be asked to give opinions on matters of policy and shall be given reasonable opportunity to refer questions asked of the officer to superior officers or to a minister. This resolution prohibits only questions asking for opinions on matters of policy and does not preclude questions asking for explanations of policies or factual questions about when and how policies were adopted. I advise that our questions on notice need to be back by the 10th of January 2020. For the Hansard record, could you please state your names and the capacity in which you appear?
Yes, I'm Anthony or Tony Richards and I'm Head of Payments Policy at the Reserve Bank.
I'm Richard Finlay and I'm a Senior Manager in the Note Issue Department of the Reserve Bank.
Great, thank you very much for being with us today again. And did you wish to make any opening remarks?
Right. Thank you, Senator. Thank you, Chair. I do. Thank you for the opportunity to appear before the committee. Let me begin by stating that the Reserve Bank is supportive of policy measures to combat the black economy. We do not have particular expertise in the area of tax policy enforcement and the black economy, but as background for the committee, we thought it may be useful to begin with a brief opening statement on the role of cash in Australia's payment system, and we're happy to leave this statement for you and for Hansard.
Great, thank you very much.
The Reserve Bank has four roles in the payment system: as policymaker or regulator of the payment system, as issuer of Australia's banknotes, as operator of Australia's real-time gross settlement system, and as a provider of banking services to the government. And we'll be very happy to answer any questions relating to the bank's payments policy and note issuing roles. The bank has powers under the Reserve Bank Act and the Payment Systems Regulation Act, which are to be directed towards controlling risk in the financial system, promoting the efficiency of the payment system, and promoting competition in the market for payment services, consistent with the overall stability of the financial system. In addition, the Reserve Bank Act tasks the bank with issuing and redeeming Australia's banknotes. In this role, the bank issues cash as it is demanded by financial institutions, which are in turn responding to demand from their customers. In the bank's role as regulator of the payment system, it seeks to promote a payment system that meets the needs of end users, that is, households, businesses and government entities, in terms of being convenient, low cost and safe and reliable. While there's always room for improvement, and the Governor made a speech on Tuesday that noted some areas, I think we can say with some justification that Australia's payment system ranks pretty well by international standards. This is certainly true with the launch early last year of the new payments platform, which allows consumers and businesses to make real-time, 24/7 payments with richer data and simple addressing using pay IDs. In addition, I note that by international standards, Australia has a fairly low-cost payment system, whether that's measured in terms of the overall resource costs of household payments or the average merchant service fees paid by Australian businesses to accept payment cards. As you'll be aware, over the past year or so, there's been a significant shift from cash to electronic payments in everyday transactions. We see evidence for this in the data in the value of cash withdrawals from ATMs, which peaked in 2009 and have been falling gradually since then. We also have some information about the use of cash from a survey of household payment patterns that we undertake every 3 years. We contract a survey firm to ask at least 1,000 Australians to record all the payments for goods and services they make for a week. Participation is voluntary, but we ensure that we match population benchmarks and the aggregate results generally match other aggregate information on payment patterns. Our first survey of consumer payments in 2007 showed that around 2/3 of household payments were made in cash at that time. Our most recent survey suggests this had fallen to around 1/4 of all household payments in 2019. This reflects a range of factors relating to household preferences and advances in technology, and it indicates that many households are increasingly finding that electronic payments are better meeting their needs for many types of transactions. Our surveys show that cash is primarily used in low-value transactions, with cash used in around 2/3 of payments under $10 in 2016. The average size of all cash transactions was $28. Our surveys also show that cash is still a very important payment method for a significant proportion of the population, especially for older and lower income households, those living in regional and remote areas, and those with disabilities. We should also note that the value of Australian banknotes outstanding continues to grow, despite their falling use in day-to-day transactions. This appears to reflect growing use of banknotes as a store of value. Reserve Bank research published late last year suggests that only around 1/4 of our outstanding banknotes by value are used to buy and sell things, while around 2/3 are held as a safe store of wealth by residents and foreigners. Indeed, our surveys also confirm that many households hold cash as a store of value and for precautionary purposes. We estimate that the remaining 10% or so of issued banknotes are split roughly evenly between banknotes that are lost and banknotes that are used for shadow economy activities. But as long as physical currency continues to play an important role in the payment system and the broader economy, including as a backup for when the electronic payment systems are down, the Reserve Bank will ensure that our banknotes are high quality and secure from counterfeiting. The current banknote series upgrade reflects this commitment. Finally, and relevant for today's hearing, we can provide a little information on the use of cash in high-value transactions by households. When we look across the 5 household surveys we've undertaken since 2007, we have a total of about 82,000 consumer payments by 5,700 individuals. Among those 82,000 payments, there were 20 transactions reported for more than $10,000. None of those used cash. But to get a slightly bigger sample of large transactions, we might look instead at transactions between $5,000 and $10,000. Altogether, there were 61 transactions over $5,000. One of these was in cash. Nearly half of these transactions used bank transfers, while other payment methods included cheques, credit cards, BPay, debit cards, and PayPal, in that order. So while we cannot rule out that some reporting bias, including because some people may be reluctant to report all their spending for privacy reasons, our survey suggests that very large transactions by households are very infrequent, and when they occur, they typically use electronic payment methods or occasionally cheques. We'd now be happy to answer the committee's questions.
Thank you very much. Thank you for providing that to us. Alex, no objection to that being tabled?
No, it's all fine.
Thank you very much. There's been a bit of commentary, which I perhaps you've read, about that this bill is somehow linked to the idea of a bank bail-in, or the imposition of negative interest rates, I guess having an impact on Australia's overall monetary policy. A, have you seen some of that commentary, and B, would you care to comment?
Of course, I can talk to that, Senator. I think that discussion is not really relevant for the current bill. The issue for the current bill is should there be a limit on a ban on the use of in business of very large transactions using cash. But the concerns that you referred to, I think, are very different, and it's a scenario that I think is something like this, that somehow this is a precursor to the imposition of negative interest rates and the government deciding to withdraw cash from circulation. I'd make 3 points on that scenario. The first one is that monetary policy is set by the Reserve Bank Board. It's not set by Treasury, the ATO, the Black Economy Task Force, or, with greatest respect, by Parliament. Yep. It's set by the Board according to the mandate that has been given to the Board under the Reserve Bank Act. And the second one is that the Governor has spoken recently on this issue, and talking about the possibility of the policy rate, so that is the cash rate target going, he said that he views the negative interest rates in Australia, the prospect of negative interest rates in Australia as extremely unlikely. And he also made the point that even in countries where the policy interest rate has gone slightly negative, the interest rates received by households on their deposits haven't. There's almost no examples of negative interest rates for household deposits in those few countries that have had negative policy rates. And then the third point I would make is that the notion that cash might be about to be withdrawn seems a little far-fetched. The Reserve Bank and the government have both said in different contexts recently that cash is a very important part of our payment system and our economy. So with respect, I think some of those concerns that you've alluded to are a little far-fetched.
Thank you very much. Do you monitor the costs of electronic transactions? And, I mean, we've had presented to the committee today the idea that a cash transaction is a way of saving consumers money. Yeah. So do you monitor the cost of electronic transactions, and how are they trending?
Yeah. We do in at least two ways. One way we do it is we publish data in our bulletin on the average merchant service fee paid by businesses to receive different types of cards, debit and credit cards. And those data show that the cost of card acceptance for Australian merchants is actually very low by Australian standards. And it's actually been falling. It's actually fallen significantly over the past 15 years or so. The Payment System Board, which is the Reserve Bank's other board, took some regulatory actions in about 2003, 2004, which have had the effect of bringing down the cost of payments. So the cost of payments in Australia is actually low by international standards. So that's the cost of accepting payments by card. So the cost of debit cards is around, on average, it's around 50 basis points, around 0.5%, and the cost of receiving credit cards is in the order of about 80 basis points, 0.8%, and that's low by international standards. The other thing we do is periodically or infrequently, we do a broader survey on the cost of household payments in general for the entire economy, the broad research cost, the broad resource costs, not just the costs paid to banks, but the costs, the times, the cost in terms of the time that consumers spend or businesses spend in making payments, etc. And that data that we've published this data most recently in 2014, I think that shows that Australia has got a fairly low-cost payment system by international standards.
And what about, I'm not even sure this is the correct phrase anymore, but clearance times, the speed and efficiency of a transaction, how have they trended over time? There was a new payment platform put in place, I think, a year ago?
Yes. Yeah.
And is there anything coming up in that regard to I guess, reduce the friction?
Yeah. Clearance times have improved. The payments industry did something called same-day settlement in 2013, which meant that there were clearing exchanges of payment instructions between banks several times a day rather than just once a day. And then, as you said, in early 2018, the industry launched the new payments platform. And that infrastructure allows basically instant payments. So I could, using my bank app, even if you're with a different bank, I could pay you, I could send some money to you, and you would have it probably in about 3 seconds. And that's been gradually rolled out to customers. Most banks have started rolling it out to their household customers, but it's increasingly being rolled out to business accounts too. And so that has very significantly improved the quality of banking services and electronic payments to both households, businesses, and governments. The government is actually using it to make emergency payments, and it can make payments at night, on weekends, and the recipient gets the money straight away within about 3 seconds.
Finally, from me, there's been some suggestion that this will inevitably drive people to the banks, particularly the big four banks. Are there payment paths that don't involve the banks? And I'm not sure you're qualified to answer that, but if you are. And what percentage of the transaction flows would they be, do you know?
Right. Well, the bigger picture is that payments are already flowing to the banks, that there's been a significant shift away from the use of cash towards electronic payments, and those electronic payments overwhelmingly go through banks. There are some non-bank electronic payment methods. For example, you could probably think of PayPal as being that,
we also had cryptocurrency raised as a potential pathway earlier today.
Right. Happy to chat about that. I actually have some Bitcoin in a wallet on my phone. I've had that for about 5 or 6 years now, just for purely experimental purposes, and it hasn't become a mainstream payment it doesn't meet many of the things that we would many of the criterion that we would normally attach to money, that it's a stable store of value. Well, it hasn't proved to be that. A unit of account. People don't post their prices in Bitcoin. Even Bitcoin conferences don't post their conference fees in Bitcoin. And then as a means of payment, well, it's a possible means of payment for person-to-person transactions, especially cross-border ones, but it's not something that people are using in day-to-day transactions. I have actually once used Bitcoin to buy a cup of coffee in Sydney. There's very few places in Sydney that will accept Bitcoin for things like that, but they don't actually want Bitcoin. They would be converting that straight back to Australian dollars. So it's interesting from a conceptual point of view, from a theoretical point of view, but it hasn't become a mainstream means of payment. But it's something we continue to study, and as you're aware, that there are proposals for other forms of stable coins, they're called. Facebook's got a proposal, but it remains to be seen if and when that will ever launch.
Okay. Senator Patrick, I understand you're on the line as well?
Yes, I am. Thank you, Chair.
Okay, excellent. Have you got limited time, Senator Patrick, or are you okay for a bit?
No, I'm okay. I'm on a journey that will last an hour, I think.
Oh, okay then. Well, in that case, we'll go to Senator Gallagher.
All right.
And then we'll come to you.
Thanks, Chair. Now, I just was struck by one of the paragraphs in your opening statement where you say that you note the value of Australian banknotes outstanding continues to grow. And you go on to say that it appears as if only... does it say there a quarter of the notes in circulation are actually used to buy and sell things?
Yes, yeah.
So what level of notes are in circulation on a daily basis?
It's roughly $80 billion outstanding.
$80 billion are outstanding on every day.
Something like $3,000 per person.
And about 25% of those are used to buy and sell things.
Yeah, and that includes cash in wallets, in tills, in ATMs, in bank branches.
Okay, so it appears as if people have quite legally made a decision to store a considerable amount of wealth in physical banknotes.
Yes.
And, if you extrapolate that out across each household, how much would each household have?
So I guess if you just take the numbers literally, to be roughly $2,000, but in actual fact, it's probably the case that most households have not very little, and a few households have a lot, and maybe people overseas also hold Australian dollars. So it's unlikely to be spread evenly.
Yeah. I think it's
I had the opportunity to go to your facility, I think in Keilor or something like that, where you wanted to put in some extra note-making facilities, and we said, why would you do that? Because people are tapping and going, but that's not true about cash. Cash is growing in circulation, isn't it?
Yeah, the amount outstanding is growing. I should say, I mean, the growth rate has slowed over recent years, but it is still the total amount of cash.
So you're still making lots and lots of notes, and only 25% of those notes are used to buy and sell things.
That's our best estimate, yes.
So we've got this situation where, you know, there's a huge amount of cash there, which now will be impacted by legislation saying that if you have $50,000 under your bed, you can't spend it in more than $10,000 lots. Is that essentially correct?
I mean, that's probably true. You can still deposit it at your bank.
Yeah,
You can still...
I mean, it's legal to get it, it's legal to save it, but you can't go out and spend all of it.
That's the intention of the bill.
Why would we do that? Why do we want to stop people from spending their money which they've legitimately saved or decided to park under their bed and not in the bank? Are you suggesting that it's all nefarious transactions if someone has $50,000 under the bed?
Well, this was a recommendation of the Black Economy Task Force. And
Okay,
I think
so we're going to go to that.
It was part of the task force. One of many recommendations that was an attempt to reduce black economy activity.
I fully support reducing black market activity, but no one's suggesting that deciding to place your store of valuable notes in cash is a black market activity.
No, and this bill doesn't talk to that, I don't think.
No, it just puts a limitation on how you can spend it once you've got it.
Yeah, I mean, as Tony noted, as far as we know from our data, cash transactions above $10,000 are incredibly rare anyway.
Yeah.
So it's not...
But if people have this store of wealth, whatever they've decided to put it in their safe or wherever, the effect of this bill would be to limit how they would be able to spend that.
Yes.
Yeah.
And is there any evidence as to the size of the black economy? I mean, this store of wealth, I mean, how much of that store of wealth would be, from the task force's view, black market activity?
I think it's probably better you ask Treasury and or the task force.
Oh, you raised
itself.
the task force, so I thought you might have had some view on that. But very clearly there's a decision made by some consumers or users of cash, banknotes, that they don't spend it, that they save it.
Yes.
And the implications of this bill are simply, if they have $20,000, they can only spend it in $7,000 lots or whatever.
Yeah.
Yeah. So, and foreign people holding Australian banknotes, this is an international hedge. I mean, I did read years ago that Japanese consumers, when faced with negative interest rates, would just buy Australian dollars because they seem to be a commodity that might give them a better return than their bank interest rates. Is that still the truth?
Well, Richard will be able to talk about the what we know about shipments of Australian banknotes abroad, for example, but at a slightly broader level, the Australian dollar is actually punches above its weight in terms of its global importance. That it's if we look at all the currencies used in foreign exchange trading, wholesale foreign exchange trading, the Australian dollar is the 5th most traded currency in the world. If we look at the currencies that are held by central banks in their foreign reserve portfolios, the Australian dollar ranks as number 7. We're not the 5th or the 7th largest economy in the world, but the Australian dollar is viewed as a credible currency. So it's not impossible, that's at the wholesale level, so it's not impossible that there could be very significant holdings by individuals offshore, and Richard may be able to tell you a bit about shipments of cash.
But don't you have that $10,000 limit? You can't just take any amount of Australian banknotes out of the country.
Well, I think you have to declare if you take more than $10,000 in or out.
Oh, you can take it, but you have to declare it.
Yeah, there's no prohibition on doing so. And as Tony said, yeah, so the big armoured car companies routinely ship many hundreds of millions of Australian dollars offshore.
Sorry, the big what companies?
Armoured car companies, so Armourguard, Proseguard, the companies that physically move cash in a safe way.
Got you now.
And so we know how much, essentially we know how much cash flows offshore. A lot of that will come back in tourists' wallets because, they'll go to the Bureau de Change overseas, get cash, then come here and spend it.
But how do we know that that's not being used by a black economy? How do you transact that? I mean, someone puts an order in for 20 million Australian dollars in Taiwan. How do you know that that's
Yeah, I mean,
Not
so,
black money being used to do it.
so the money that goes offshore is going from bank to bank. So I guess it's at least at the first destination, it's going to a big, reputable overseas bank.
Like Westpac.
Well, I mean, Westpac might be the Australian bank, and they'll be sending it to Bank of China or JP Morgan or some foreign bank who will then pass it on to their customers.
Okay, so you estimate the remaining 10% of so of issued banknotes are split roughly evenly between banknotes that are lost and banknotes that are used for the shadow economy activities. So can you delve into that a bit? What does that look like?
Yeah.
Monetary terms.
So I guess I should say up front that it's banknotes. It's hard to be definitive about what they're used for because once they leave our vaults, we don't track them, we don't trace them. So to try and understand the shadow economy aspect, we used some data from the ABS, who in 2012, I think, estimated the size of the shadow economy in Australia. The Black Economy Task Force also came up with some estimates, which were, so in their estimate was the ABS numbers times 1.5. So those estimates gave us a sense of the size of the black economy in terms of spending. But then because one banknote can be used multiple times, we had to come up with estimates about how fast cash circulates. So based on those two, given a certain amount of spending and a view on how many times one banknote can be used per year, we estimated that roughly 5% of the amount of spending on shadow economy activities as estimated by the ABS could be facilitated by roughly 5% of the banknotes outstanding.
Sorry, we do have media in the room, so just bring that to your attention. You don't have any objection?
So it's all in, the RBA put this research out, so it's all on the public record. It was put out in late 2018.
Do you have any estimate of...
We're on broadcast.
Does the Reserve Bank, in its purvey, estimate what the shadow economy is and what it looks like?
No. I mean, so we relied on ABS estimates. We've got no expertise in
How does the ABS estimate shadow economy? Does someone volunteer there in the shadow economy and say, put me in that box?
The ABS does lots of good work. So the short answer is I don't know. I think any economic estimate is a hard thing to do.
Yeah.
They estimate inflation, they estimate GDP. They've got a lot of very skilled statisticians. And
I'm just, given the volume of turning this argument on its head, given the volume of transactions by FPOS and tap and go, how does a business exist in the shadow economy? I mean, you literally have to be a stall holder in a marketplace and operating every Saturday and Sunday, and that would be, the only way you could exist outside of the legitimate economy, I would have thought.
I mean, I've got no personal experience that I could share, but I guess anecdotally, tradespeople could take payment and not declare it. Shops. I
can understand that. So tradesman comes around, no receipt required, avoids the GST. But they still bought the materials for the job. They've still got to run their logbook for their vehicle. They've still got to, put a return in sooner or later, unless they're completely, they're going to go broke anyway. One way or other, they'll get found out. So, I mean, I wouldn't have thought that was a huge... And the incentive really is to get the GST because you can take it off your other side. I mean, there's two sides to the GST, isn't there? So is this a serious problem?
I don't think we can. We have no expertise on
I
how.
think that's probably a question for Treasury. So I think can we go to Senator Patrick?
Yeah.
Senator Patrick?
Thank you, Chair. I heard in response to an answer that the Chair asked that you do keep track of household expenditure on bank charges. Can you give some details as to what they are?
Yeah, Senator, the figures that I quoted are the merchant service fees paid by all sorts of merchants, retailers and other businesses that accept card payments. So that's the percentage fee in total that Australian merchants and businesses pay to accept card payments. The Reserve Bank also publishes some data on fees, on bank fees. They're published once a year in our bulletin. I don't have those numbers in front of me, but if you had specific questions, we could take them on notice.
Okay, so if you could direct the committee to those, to where we can find that on the web, that would be useful. Just in relation to those merchant fees and indeed bank fees, has the Reserve Bank examined whether or not there is justification in the size of those fees?
The bank has a number of regulations that have impacted the level of card fees paid by merchants. We have some standards or some regulations which cap interchange fees paid between banks, and these fees are set at much lower levels than in many other economies. The bank has also taken regulatory action regarding no surcharge rules, and this has had the effect of bringing down the fees paid by Australian merchants. So I think we have a good understanding of what goes into those fees, and our policy actions have actually exerted a fair bit of downward pressure on them.
Yes, but that's an answer to a different question. You're saying there are regulatory impositions and constraints upon the banks and indeed merchants. My question went to an analysis as to whether or not those fees actually generate income for the companies as opposed to cover off the cost involved in the transaction.
I think I'd probably fall back on my earlier comment that the merchant service fees paid by Australian merchants are significantly lower than in most other countries. So there's every reason to think that it's a reasonably competitive market, and that our policy actions in this respect have been successful. The fact that Australia has got a fairly low-cost payment system.
Okay, can you provide the committee with a comparison, please? Your comparison data?
Would be happy to do so.
Okay, but once again, I just reiterate that you're talking about how they compare with perhaps other jurisdictions, as opposed to whether, as I think most Australians would suspect, that the banks and indeed merchants make money from these transactions. And the relevance of that to this inquiry is that this legislation will in fact force people to go to electronic transactions. So my question again goes to, and the answer can be no, but have you conducted analysis, or are you aware of any other government entity that has conducted analysis as to the actual cost of conducting a transaction versus the cost or the charge that is levied on the consumer?
I don't have any specific evidence on that question for the banks, Senator, but as regards any fees charged by merchants, I can comment on that in 2016 there was regulatory reform on merchant surcharges. So where the merchant surcharges a consumer for a particular payment method, say, for example, a particular type of credit card, the merchant may not charge more, pass on an additional cost that is any larger than their cost of acceptance, that costs than they're being charged by their bank. So, for example, as a result of those reforms which the Reserve Bank implemented and which the ACCC was given investigative and enforcement powers, as a result of those reforms, for example, the surcharges charged by the domestic airlines came down very significantly. So I think we can be confident that any surcharges charged by merchants for card acceptance are no more than their cost of acceptance that they have to pay their provider of financial services.
Yeah, but then the question goes to, is the provider of those financial services profiting from the fee? So it just transfers the question back up the chain.
Senator, we'll provide you with the data that we have, and that might be able to shed some light on this.
Okay, thank you.
We will need to move on, Senator Patrick.
Okay, can I just ask another quick
Yes,
question,
will have to be
please?
the last one.
Okay. You talked about cryptocurrency and perhaps low take-up. Do you have any data that you could provide on notice that shows the take-up of cryptocurrency over perhaps the last 5 years? And indeed, is there any thought that has been applied to the idea that if this legislation were to be enacted, whether or not there would be a drive towards cryptocurrencies, noting it would avoid the sort of scrutiny that is, or the traceability being sort of sought under this legislation?
I'll take your question on any data on notice to see if we can provide anything.
Thank you.
On the question of could there be a shift towards cryptocurrencies, I suppose at the margin, if an entity is currently transacting in cash for nefarious reasons and decides that it's no longer going to use cash, it could potentially shift into cryptocurrency. I note that to get into cryptocurrency, you typically have to get in via a bank transfer. So there's there may be some limits on that. So to get your money either into or out of cryptocurrency, you probably have to go through the domestic banking system. Once it's in cryptocurrency, something like Bitcoin, it's not completely untraceable. It's less traceable than a bank deposit, but it's actually more traceable than cash. So, but I note that the bill defines currency to include cryptocurrency, though the Treasury may be exempting cryptocurrency initially.
Okay, thank you, Chair.
Thank you, Senator Patrick. Will, thank you for your time today. We appreciate it. We will need to move on now to AUSTRAC.